Hello, hello, and welcome to Losers Become Winners for August 26th, with the Alphas getting 1 point with PGR exiting at 17%, giving the Alphas 8 points over the Tigers 5. Let's go to the charts. There we are. There is our exit. We got out at 7:40. We got into the trade at 6:30. This trade was lasted 43 days. That's how long it took for this progressive just to finally break out and get to our 30% uh, take profit rule. So we are 110%, two contracts, 220 return, $3 for the fees, making it 217 with a minus 220, 2177 for the carry with a new O of 1960. Oh yes, 1960. That was an interesting year. Oh, great. Moving on now to our next leader. Walgreen got it at 4%. Let's go take that look at that Walgreen. Now, unfortunately we have to step through the 30-day moving averages because why? They don't have easy established exits until the price closes opposite of the trade. Now, this was a former tug-a-war. You saw here the Tigers were doing a call and they got stopped out. So they lost their tug-of-war here. The Alpha have only 4% to their gain here in the trade, but at the same time, they are moving in the nice right direction. There is a danger zone right here. You see this here? We are now in the 20%, the below 20 in the statistics. Now, do we panic and get out? No, we don't. We just hold to just be aware of watching watching the 30-day moving average line move down to eventually get into strong, more positive territory. Going over to CVS. At CVS, we have here we are at CBS. We have we have a put. Oh, nice move there on the put. You see right there. Remember I talked about this? I went up here and it didn't get. Now, had we done price action exit, remember there are virtually three major schools of thoughts for the 30-day moving average exit. One, price touches the line, it's out. So this put would have been stopped out right there. That's for your more conservative traders. Then you have your moderate traders, which is myself, looking for a 30% move return to take profit or close above the line since it's a put. The fourth is the more take risk trader. They'll wait for an ROI of 100. And does that exist? Does that work? Does that make profit? Yes, it does. Go back and watch my videos prior to the challenge. So watch the spring of 2020 and some of the fall of 2019 that you'll see that the 30-day moving average. Now, at that time, we had mixed strategies in both accounts. We have now separated the two to get a performance reading on the action. So that is what's happening there. But the bottom line is that the 30-day moving average is still in play because we're doing a moderate exit. The moderate exit is close opposite of the trade or take profit at 30%. All right. So now going on to XLV. XLV is right here and it's doing okay. It's a call. It's a call. We want that call, and sure enough, it's moving. Remember, at the 30-day moving average keeps going up in a nice incline, and price is able to maintain with that support. We'll be also looking at an opportunity of getting out with another win. XLV. Now, XLV is a tug-of-war, so we're going to be able to knock out two positions of both accounts. And here it is. Let me zoom in a little closer so we get a easier clean. There we go. So the Tigers are rooting for a call. They want that price to get back up. This is their third rail. This is their exit line. Price action on price action on price channel. It is on price action. Price touches that rail, it's out. There is no closing above or below the line. It is touched, it's gone, done. Over here in the alphas, though, they're looking for the close above the 30 to be stopped out or get to that 30 ROI. Yeah. So, and remember I just mentioned yesterday that the alphas had a slight lead over the Tigers because price is showing strong indication going down and possibility maybe even tomorrow the Tigers might get stopped out of this and the alphas will continue on to an opportunity to a 30% take profit rule. That takes us to CVX. CVX is right here, and it's a put also. It's going in a nice right direction, and not a lot of space between. Well, it is. The closes here and there, so we have some nice room to for padding, and it's going in the nice right direction. Okay, that takes us to Raytheon. Here it comes up, Raytheon, and there is Raytheon here, and there is Raytheon. The Raytheon is doing very good, and also a put. Went out an up candle, but then this is a doji indicating that price is stuck between one of the two, and the indicators show that we have the slight edge for the downside, which is going to help our put. So that takes care of the alphas. Let's go over to the Tigers, and in the Tigers, we did have an exit. We had an exit on Edison. So Edison got stopped out today. Unfortunately, it was a loss for the Tigers. So let me zoom in a little closer, and there we are. And remember, our stop was based here on this green price channel, and price got taken out right there. And the results was a 33.5% loss in 3 days. 187 on one contract, minus 187, minus $2 for the fee roundup, 189 for the loss, 841 to carry with a new O of 1030 now for Edison. Okay, UA is still not in anywhere close to returning. They're at minus 47%. And remember, XLE is in that tug of war with the alphas. They're rooting for a put, and the alphas are going for the put. Tigers are going for the call, and the Tigers and the alphas are going for the puts. Long day today, guys. All right, I thank you very much for checking it out, and we'll catch you later with the losers become winners, with alphas getting 1 point, 8 points to the scoreboard at 17% for PGR profit. And take care. Bye bye.